Hi there. Hi, everyone. Thanks for joining us wherever you are in the world. My name is Andrew Smith. I'm one of the founders here at Fathom, and today's webinar is titled, Why Financial Markets Should Use Future Flood Risk Data. Now, actually, you may be asking yourself, why should I use flood risk data at all, whether that's current or future? But hopefully, after today's webinar, you'll be convinced that you should be using these kinds of information. And hopefully, you'll have a much better understanding of what these data actually entail. As I mentioned, my name is Andrew Smith. I'm one of the founders here at Fathom, and I'll be giving you an overview today of the data we produced and Fathom, the organization. I'm joined by Matt Jones, our Chief Product Officer, and Karena Vaughan, who is our Head of ESG and Climate Risk. And Karena will be talking about some of the more sector-specific use cases for our data. To give you a little overview of what is actually comprising this webinar today, as I mentioned, I will talk through an overview of Fathom, give you an introduction to flood modeling itself. Nothing too detailed, but hopefully you'll have a nice understanding of how these models actually work. I'll also talk through some of the modeling challenges, the real obstacles we have to overcome to build these kinds of data sets, and also talk through some of the latest research coming out of our work. Matt will then talk through some of the features and access, so you'll have an understanding of what these data actually are and how you can access them. And Karena will talk through, as I've mentioned, some of the sector-specific use cases. I'll round off by talking about some of our customers and partners, people who are actually using these data, and then there is time for a Q&A at the end, so do feel free to drop your questions into the Q&A box. So first of all, Fathom, who are we? Well, we were formed out of the University of Bristol in the UK, and the University of Bristol is one of the leading research groups in the world building these somewhat niche things called computational flood models. In fact, anybody building dynamic two-dimensional flood models can trace the heritage of those data all the way back to the University of Bristol here in the UK. And we were formed by a team of scientists at the university, and our aim in the beginning actually was to try and build models of the entire planet. We realized that actually the vast majority of the planet did not have any flood risk information available. So we wanted to try and build data sets that could cover everywhere. And my research was actually focused on, during my PhD, was focused on trying to couple flood models with climate models. And I began that over 10 years ago, and I'm somewhat excited to see that the application of those kinds of data sets is becoming a real world application. We are now trying to couple flood models with climate models, and now being used by decision makers. The last point here is an important one, and that is that we are a research organization. And I mean it when I say that. We publish our methods in the world's best academic journals frequently. I think we now publish more peer-reviewed science than the research group from which we emerged. And you can trace the heritage of our models and our data all the way back to the 1990s. Just a very quick overview of what I think are some of Fathom's USPs. As I mentioned, we are open, and I believe we have a lot of integrity in the models that we build, in that we expose the methods to peer review amongst our leading academics working in this space around the world get to really delve into our methods. That also allows us to get access to cutting edge data sets that perhaps other groups don't get access to when you don't engage in academia in this way. I think that's demonstrated by some of our work with terrain data sets, and I've got some slides coming up to talk about terrain data sets, and specifically something called FabDem. We have recently released and built, and again, something I'll talk through in a moment, a climate framework that enables you to actually get access to any climate scenario that you want out to 2100. And that's a multi-peril climate framework. So it covers multiple different forms of flooding for the whole planet under any climate scenario. And we're calling that our climate dynamics framework. And lastly, we are spending a lot of our time now trying to make these data more accessible. When you're talking about flood risk information, you're talking about high resolution data sets at large scales. So they can be very, very big and difficult to consume. But we're trying to make these data sets more accessible. And Matt will talk to this, but we are releasing our API now, which gives you rapid access to many terabytes worth of data. As I mentioned, Fathom's data and models, we have a rich history of academic literature tracing our models all the way back to the early 1990s. And one of the exciting things for me here at Fathom, as one of the founders, is to see the volume and quality of the research coming out of our group just in the past few years. All of the papers you can see going back to 2015 have actually come out of Fathom, Fathom, the company, as opposed to the university. So why should we care about flood risk? Well, flooding is the most costly natural disaster in the world. By whichever metric you measure it, it is the most costly natural disaster, both in terms of economic losses, but also, unfortunately, in terms of human losses as well. And you can really pick any eye-watering figure from numerous reports to illustrate this point. And unfortunately, it will get worse. It'll get worse regardless of what's happening in the climate, and that's down to urbanization patterns. Wherever we look in the world, what we see is that there's continuing encroachment into floodplain areas, and that's the case both in the developed world and the developing world. Recent research shows that we will see a large amplification, for example, in flood risk in the US, just down to changing urbanization patterns and building in places where we shouldn't build. But of course, we are seemingly living in climate terms in non-stationary times. We are seeing numerous weather events illustrating this point, and I've picked one out here, and this is a rain gauge from Central Park in New York. And what those two blocks show at the bottom of the screen is an indication of two records that were broken in 2021. Now, a rainfall record in Central Park was broken in August 2021, and the new record was of 48 millimeters of rainfall in an hour. That was then broken just the next month, and the new record has almost doubled. And that the record that was broken went all the way back to 1886. And this is just an anecdotal single example, but we are seeing these extreme weather events seemingly occurring more and more frequently. So what can we do about it? How can we try and understand this peril, the most costly natural disaster in the world? How can we try and understand the phenomenon, and how can we use those data to inform decision making? Well, we can build really incredible computer models of floods. We can build models that are incredibly detailed and accurate. And I've got an example here of a simulation from the north of England. This is a town called Carlisle. And this is a simulation of a real world event. So we're trying to replicate observations here. We built a model, and then we ran it, and we try to see how well it captures something that occurred in reality. And what we found here in this case is that the model actually represents the observations to within error. And what that means is that, well, the observations themselves have error, and this model is within the limits of that error. So the model is effectively as good as we can measure it to be. And that sounds fantastic. So we built a model that is as good as we can test it to be. But this is indeed an example of a model built in a very data-rich area. So this is built in a region where we have lots and lots of local information, things like local terrain data sets, information on river size. So engineers have surveyed the size of the river channels. And we have observations on things like extreme flows. But unfortunately, for the majority of the world, we just don't have that information. Flood models traditionally have been built with this kind of local scale mindset where you have lots and lots of local information. But what if you don't have that information? What if you want to go from local scales to large scales? And I've got the most extreme example you can have here, which is the local scale to the global scale. And that is the scale of the challenge that we set ourselves here at Fathom. But in fact, you could even use like a single country to illustrate the large scale here. How do you go from small scale floods, the scale on which they occur, to say the size of America? How do we simulate every single river in America? Well, to do that, you have to overcome quite a long list of what were insurmountable hurdles to do that. Things like terrain data sets. We don't have, or we didn't have, good terrain data sets everywhere. And I'll talk to that in a moment. What about river channels and how big they are? We need to simulate the propagation of water through river channels. But if you don't know where the rivers are and how big they are, what do we do about that? And what do we do about observations of extremes? We don't have observations of extreme river flows everywhere. Those are just some of the challenges that we've had to overcome in the last 5 to 10 years to try and build these kinds of models. And I've got some examples here of some of the key advances that have been made in the latest release of Fathom's global data sets. So we built version 3 of our global model, has been released now just a few months ago. And it really does represent a big advance on what we had previously. So the models now simulate we believe in an accurate way the size of river channels everywhere with our dynamic channel solver. We cover all major flood perils, so flash flooding, that's pluvial, and riverine, so river flooding, fluvial, and coastal inundation everywhere. I'll talk in a little detail in a moment about terrain data sets and why that's important. We also have, as I've mentioned, our climate dynamics framework. So we're simulating these perils now under any climate scenario that you want with uncertainty. And we are validating these models even in the most data poor areas. So just a quick word on terrain data sets. Now, when you're trying to build flood models, actually the principal data set that we care about in terms of input is terrain. It's a map of the Earth's surface. If you don't have a map of the Earth's surface, then building flood models becomes incredibly difficult. And what I've got on the screen at the moment is a simulation showing a dynamic simulation of a flood in Australia. And on the left, you have something called Merit DEM, and that's the previous best version of our global terrain data set. So when we're building models of the whole planet, Merit DEM is what we built our models on for version 2 of Fathom's data. Now in the middle, we have a brand new terrain data set called FabDem. And this is a reprocessing of a European Space Agency terrain data set that Fathom's taken and we've reprocessed with colleagues at the University of Bristol. And we've stripped out forests and buildings, hence FAB, forests and buildings, remove DEM. And on the right, we have LiDAR. And LiDAR is what we call kind of gold standard. That's the best terrain data sets that we have. They really are incredibly accurate and precise data sets. Now, the idea of the animation here is to show you that we are much closer now to LiDAR, even in really data poor areas. So even where we don't have any local information on terrain, we are now much closer to what we deem to be truth. So the models are getting much better. And actually, we only use FabDem in areas where we don't have local terrain data sets. And one of the things we do here at Fathom is to spend a lot of our time collating local terrain data sets. And hopefully you can see here that we have good local terrain data sets now in quite large parts of the world, America, Europe, Australia, Japan. So I thought I'd just visually show you the evolution of these data sets over the past few years. Now, this is an area in Zimbabwe, and this is somewhere that was interesting principally for the World Bank, because there's a hospital actually in the middle of your screen in a town there. And this is version 1 of Fathom's global data. So this is the first ever high resolution global flood model that was ever built. And this is going to show you now how those data have evolved in time. So this is version 1. And then this was version 2 that was released principally with the update of Merit DEM. And what you can see, it's done a better job at capturing some of the smaller flow pathways, and we have more confined realistic flow on the larger channels. But I can see that the smaller channels here look quite smooth, and perhaps the floodplains look a little larger than they would in reality. And that's down to the quite aggressive smoothing that had to be done on the terrain data sets. This is where we're at now. This is our new version 3 global terrain data set with updates to things like channel bathymetries. We are now much closer to local scale, skill and accuracy, even in the most data poor areas of the world. I really do believe that these models now have considerable skill, even in areas where we have no local information available. And we're demonstrating this with validation work that's continuing. We've already heavily validated many of our models in the past in the peer-reviewed literature. And there's a list actually of different validation studies at the bottom of your screen there. But there will be more to come. So we are currently validating these models against observations of real-world flows, even in data poor areas. And this is an example from Vietnam, where we have an observed flood on the left and a match to our closest hazard layer on the right. And what we can see is that there's an 84% match between the satellite imagery, which will itself have error, and our hazard layers. So we are seeing, as I've mentioned, considerable skill, I believe, in these models now, even in very, very data poor areas. And that's great. So I've spoken there principally about building hazard models that can simulate hazard realistically and accurately today. But what about the future? Well, I've just put together a few examples here of recent, and you'll note the quotations, climate events. And these are flood events that have occurred in the last year or two that, in the press at least, have had the word climate quite heavily associated with them. And indeed, we do believe that these kinds of events will amplify in many, many parts of the world in the future. And the reason for that is that as the climate warms, There's quite a, in many ways, a simple physical law called the Clausius-Clapeyron law that dictates that as air gets warmer, it can hold more water. So we do expect that, particularly at local scales, local scale precipitation extremes will amplify in the future. But actually understanding that risk in reality, in space, for flood risk is incredibly difficult. And that's principally down to the complexity of flooding as a peril and its very, very local nature. Currently, the vast majority of climate models that are built in the world are just not built at the kinds of scales that we as flood risk modelers care about. So trying to couple those very coarse scale climate models with very local scale flood models is a really, really difficult task, and one that we are trying to solve here at Fathom in the most robust way we think we can. So just to outline the scale of the challenge here in trying to simulate future flood risk. Again, I thought I'd show a quick schematic animation of the hurdles that we have to overcome to build these kinds of data sets. So let's start with different emission scenarios and time horizons. So what we've got here is an indication of different emission scenarios that could plausibly occur out to the end of the century. So if we're trying to build models that capture the full range of uncertainty, then we begin by having to sample multiple emission scenarios and indeed multiple time horizons. So looking at what emissions may occur at different time horizons is a starting point. So we already have two changing variables. We then have three different perils. So we have to simulate these three distinct and different flood perils separately. So we have flash flooding, riverine flooding, and coastal flooding everywhere. And we have to simulate these perils at very local scale. So we're already talking about a multi-dimensional data set at very high resolutions, and we're simulating at a global scale. So we're trying to build these perils and data sets at global scales. Added to that, finally, if you are trying to sample different emission scenarios and time horizons, and indeed trying to sample different climate model ensembles, then we already have quite a wide-ranging uncertainty. So we have multiple versions of these data as well. Hopefully that kind of indicates that when we are trying to build these data sets in a robust way that captures uncertainty, then we end up with data that are many, many terabytes in size and can be quite difficult to consume. But that is indeed what we built here at Fathom. So we have a climate framework now called our climate dynamics framework that covers all major flood-driven perils, the whole planet, under any climate scenario that you want. And if anybody out there is really interested in how we build these things, I would actually urge you to go and watch some of our other webinars. So we have two launch webinars, firstly for the hazard modeling, and a second one for our climate dynamics framework that will really give you a good deep dive into how we built this framework. I'll round off by showing you some of the research highlights indicating how we've used these data sets to tell us things about how risk is changing in the future. Now, firstly, a look towards the US. So this is a paper that we published last year. And in this paper, we used our models to look at future risk in the US. So we looked at changing climate, so how the climate may change across the states. And also we looked at changing urbanization patterns as well. So we looked at changing where people are going to be living in the US using the US government's own models of where they think people will live. Now, interestingly, what we found is that with a median climate scenario, RCP 4.5 out to 2050, we see around a 26% increase in risk because of climate alone in the US. But actually what we found is that the population change in the US dwarfs the climate signal. Now, I know we're only talking about a single emission scenario in this particular study, but still we're seeing that the population change is really the dominant change in terms of risk. It's going to be building in data, building in areas in which you shouldn't be building is really the primary cause of amplifying risk in the US. And we also found, interestingly, a disproportionate impact in terms of climate on minority communities in the US, in the Gulf and the south of the US. But again, I think the take-home message for me from this paper is that the majority of future risk is actually historical risk. And what we mean by that is that the majority of future risk is in areas that are risky right now. It's just that we shouldn't be building in them when seemingly we will be. This is some very, very new research, and this is a look towards the UK now, and we have built a catastrophe model in the UK, which is different to the hazard data that you'll principally be hearing about today. And we built a CAT model that simulates different events under 5 different warming levels across the UK. Now, what we found is that there's already been around a 6% increase in annual average losses today compared to 1990. And encouragingly, if we did stick to some of the net zero pledges in COP26, we would only see a further 2% increase in annual average losses compared to the losses from 1990 to 2020. Sticking to some of the pledges in COP would see still quite a significant increase in annual average losses, around a 23% increase in annual average losses. And worst case, business as usual yields some actually, when we consider we're talking about annual average losses here, not even just the most extreme events, quite a scary, I think, or alarming, greater than 35% increase in annual average losses alone if we carry on business as usual. Hopefully those 2 research highlights kind of give you an indication that when we say we're a research-led organization, we really are, and we publish these papers with both the methods and the implications of that research in the world's best academic journals very frequently. I'm going to hand over now to Matt, who's going to talk through the actual data themselves, so you'll get an indication of what these data actually are comprised of and how you can actually access them. So Matt, over to you.
Thanks, Andy. Hi, everyone. I'm going to talk about the features and options within the global flood map data, as well as going into climate dynamics in a bit more detail, and I'll also cover the different ways of accessing the data. Next slide, please. So this slide covers what the data comprise, the different metrics and the different options in the global flood map data. And before getting into the detail on this, I think it's worth emphasizing, as Andy has already, that actually this truly is a global product, excluding Antarctica and Greenland. We cover the whole planet, and a fine resolution as well, largely because of the terrain data work we've done in producing Fathom. We can confidently cover the planet at a fairly high resolution. So we actually use a 1 arc-second resolution grid, which at the equator is around about 30 meters resolution, but actually as you move away from the equator towards the poles, the resolution improves. So the worst resolution you get in this product is a horizontal resolution of 30 meters, which for the whole planet means this is a very detailed and comprehensive data set. I'll talk about climate dynamics in a few slides' time, but for this slide, I think it's just worth noting that when we talk about current, we mean 2020, and actually a lot of work has gone already into understanding what a 2020 level of climate forcing means. So we don't just take the observational data from the 1960s or 70s or whenever and average it. We put some meaningful thought via the climate dynamics framework into adjusting to a consistent and current level of climate forcing. Even if you're not interested or considering future climate change, we have a consistent definition and methodology for getting to the current flood maps. So in terms of metrics, in terms of what you can license from us, there's 2 main sets of metrics, I would say. One are what you typically expect if you talk about flood hazard maps. That is flood depth by return period, so depths at different frequencies. And the other is risk scores, which are new for this product, and I'll talk about risk scores in a minute. So flood depths by return periods, we cover a fairly wide range of return periods, so from 5 to 1,000 years, 8 standard return periods in that range. And these maps show you, if you want a particular frequency of flooding, like the 100-year flood or the 1% flood, these show you what the depth of flooding would look like for the 100-year return period flood. And indeed, you saw some examples of those maps already in the slides that Andy showed you. And I think the transition there, especially from the Global 2 product to our Global Flood Map 3 product, was pretty amazing. And a large part of that, as Andy said, was down to the better elevation data, the better terrain data derived from research heavily involving Fathom. So for the flood hazard maps, the flood depth maps, there are different types, different perils. So fluvial is river flooding, and that's available in both defended and undefended form. Fluvial is surface water flooding or flash flooding, and coastal is flooding from the combined impact of high tides and storm surge events, so low pressure events and wave action. And coastal, just like fluvial, is available in both defended and undefended form. And the use of these sort of maps is if you're interested in understanding your flooding at a particular frequency of flooding, then of course these maps are exactly what they're designed. This is exactly what those maps are designed for. And as I said, in all our previous flood map products and in sort of any flood map products, really, if you talk about flood hazard maps, very often people mean depth by return period maps, which is what these maps represent. New for Global Flood Map 3 are what we call risk scores. And we have two different types of risk scores, which I'll go through now. One is relative risk and one is risk category. And the concept here is if we take an individual asset, so let's say a property, of an arbitrary value, so let's say 1 million, we take that property and we calculate from the depth frequency information the average annual loss. So the mean annual loss for that property, and we take that same property, that identical property of that same value, and we move that around every 30 meters, every 1 arcsecond grid cell on the planet, and repeat the calculation. And then we get a continuous number from 0 if it's outside the extreme flood, outside the 1,000-year flood, up to a theoretical maximum of 1 million, but it will never get to 1 million. That would mean that the house will be destroyed every single year from flooding. And there shouldn't be assets in those sort of locations. But you get a continuous number from 0 to 1 million that reflects how the risk changes in every single grid cell in our flood maps. Risk category is similar, but if you don't want a continuous number between 0 and theoretically 1 million, then what risk category does is to chunk that down a bit, is to break that down into a smaller set of discrete numbers between 0 and 100. So what we do there is take relative risk, take the 0 to 1 million and split that into 6 to 100. And I'll come on to how we do that in the next slide. And then we look outside the 1,000-year flood, we look outside our extreme flood, and we look at grid cells that are close to it. And we categorize grid cells that are close to, but outside the extreme flood, into risk categories 1 to 5. So you have in this 0 to 100 measure, you have a good range, a good mapping, if you like, of locations that are at flood risk within the 1,000-year ones and maybe at flood risk 1 to 5. And the reason we look outside our extreme flood is that there's uncertainty in this mapping process, there's uncertainty in the data. And even though we're confident that the flood maps we present are the best you can do with the data available, we think it's still useful information to let you know about risks that are close to the extreme flood, both in a horizontal sense and in a vertical sense. So that's why I provide that lower category scoring from 1 to 5. And again, I'll touch on that in the next slide. A little bit like the depth return period maps, there's different perils that we can provide these risk scores for. So fluvial river flooding, pluvial surface water flooding and coastal flooding, or indeed any combinations of those. So fluvial and pluvial will be inland, and then inland and coastal will be the overarching peril of flood. So those risk scores, both relative risk and risk category, available for those different types there. And there's a lot of information packed into these risk scores, because not only have you got the depth frequency information, to get to an average annual loss calculation, we use something called a vulnerability curve. So this is a function that relates the depth of flooding to the damage that can be caused by the flooding. And we also weight between defended and undefended maps in a sensible way. So that's why under the risk score options, you haven't got defended and undefended, because we've done the weighting already. So there's a lot of information packed into these risk scores. And we think if actually what you're interested in is a consistent metric that you can relate to something like probability of default, for example, then these risk scores are a really useful metric, because they pack a lot of information into a single type of score. And given that they're new, I'll just go into a bit more detail on the difference between relative risk and risk category on the next slide. So this graph hopefully explains that. So you've got risk category along the bottom on the x-axis, 0 to 100. And then it's shown in green there, you have relative risk. So that's average annual loss for a uniform exposure of 1 million. And in orange there, you have the height above the extreme flood surface. So the extreme flood surface is a 1,000-year flood surface. And this is the height for locations outside the extreme flood, the vertical difference between grid cells outside the extreme flood and the extreme flood surface. And so you can see how that categorization works. Obviously, if locations are outside the extreme flood, but close to it in a vertical sense, then the categorization, it will be a higher, it will be a 5. And if they're outside the extreme flood, but further away, higher, above the extreme flood in a vertical sense, and the categorization's lower, it would be a 1, for example. So that's how we get from risk category to from relative risk and height above floodplain to risk category. Hopefully that's clear. Next slide, please. Climate dynamics. So one of the things we did when we looked to scope this product was ask lots of people what they want from climate condition flood maps, what different climate options people would want. And we got a whole range of different answers. So it wasn't possible or feasible, we thought, to just put out a discrete set of climate options for different years, for different climate scenarios, because the requests we got back from customers and prospects were so varied, we would not be able to service all those requests. So what we did instead was put together a framework for understanding how different levels of climate forcing impact flood risk, and we call that a climate dynamics framework. And you can see the main parameters there. So delta T is the change in global warming level compared to pre-industrial. Pre-industrial we define as 1850 to 1900. Climate scenarios are the emission scenarios Andy mentioned and showed some slides on. So these are things like the SSPs and the RCPs and the NGFS scenarios. I'll talk about those in more detail in the next slide. Time horizon is which you're interested in. And percentiles, Andy's already mentioned this, but this is looking at uncertainty in the climate modelling. We look at ensembles of climate model outputs, so we can get a sense of the uncertainty in those climate models and how that maps through into uncertainty in flood risk due to the climate conditioning. And we think actually there can be so much uncertainty in the climate modelling, and it varies so much depending on where you are and the type of peril you're looking at. It's really important we surface that information, enable you to see how that climate model uncertainty does impact flood risk. So you as a user would choose some sensible combination of these parameters. So it might be a certain level of warming at a certain future point in time, or it might be a certain emission scenario at a certain point in time, and for whichever percentiles you want to define your uncertainty range. And we'll give you the climate condition flood maps defined by those sets of parameters. And what that means is, whatever your use case, whether it's some internal view of risk or it's responding to regulators, you've got a lot of flexibility here in being able to produce forward-looking estimates of flood risk. Next slide, please. And this gives a bit more information about those parameters. So in terms of year, you can pick any year out to the end of the century. In terms of global warming level, any level of global warming up to between 1 degree and 5 degrees. And you can see the different climate scenarios there. So you have the SSPs as shared socioeconomic pathways that are in the latest, the 6th IPCC assessment report. You've got the RCPs, the representative concentration pathways, which are prevalent in the previous IPCC report. And you've got the NGFS, the network for greener financial system scenarios, with 6 different NGFS scenarios embedded in a climate dynamics framework. And these are scenarios that were designed to help central banks and regulators put together climate regulation. And the uncertainty there as well. The 50th, the median, is what we normally give if people don't want uncertainty, but a standard can also provide the 17th and the 83rd percentiles. And they might seem like slightly arbitrary percentiles, but they're defined because that difference between the 83rd and the 17th percentile, that 66% range, is what the IPCC defines as likely. So that range was chosen deliberately. So you can see quite a flexible framework, quite a wide range of options available. Next slide, please. So a large amount of data there. You can see 30-meter resolution data for all the different perils, for all the different options, for all the different metrics I've just spoken about, a large amount of data. If you want just one climate option for one uncertainty, so for the median or something, that's roughly a terabyte, a little bit less than a terabyte's worth of data. So you can see if you're multiple climate options, it scales up quite quickly. Now, one of the ways in getting access to the data is we can provide you with a set of GeoTIFF files, and we're happy to do that. We have done that. It's useful when API integration isn't feasible or isn't desired for whatever reason. A couple of things to bear in mind there. You need to predefine the climate options. So although you'll have access to the full range of the climate dynamics framework, you'll need to tell us what you want if you want to host the data yourselves on premise. So the climate options do need to be predefined for us to generate the climate condition maps, given the options you present us with. And the data volumes, like I've said, can be quite large. So we're talking multi-terabytes of data, as Andy's mentioned, which is perfectly fine. We've done that before, but it's just a consideration. If you have access to a geospatial platform through some sort of partner system, for example, then that can be a really quick way of getting access to our data. We have our data already in a number of partner systems. You can see some of those on this slide here. There are more on the website. If you have a geospatial platform and our data isn't in it, then talk to your partner or your platform provider, or talk to us. And I'm sure we can get our data into the geospatial platform really quickly. And a third option, which Andy's already mentioned, but which I want to highlight, is we now have an API from the beginning of this year. We've had an API that we host. So those multiple terabytes of data are hosted by us. And you can very simply get access in a programmatic way to those data and have the full range of climate options available to you without you having to host those data yourself. So that's all I wanted to cover. What I would also mention is that there are some links put in the chat, and in those links in the chat, we've actually put links to some web viewers, and those web viewers will give you an idea of what the risk score data look like within a chunk of the UK. So you have both relative risk and risk category data viewers available to you. So please, after the webinar, do go and take a look at those. And with that, I'll hand over to Karena, who's going to talk about use cases.
Thank you, Matt. Just going to get my video going. Okay, lovely. Hope that you can all see me and hear me. Okay, so, well, good morning, everyone. I'm Karena Vaughan, and I lead on climate risk in the financial sector at Fathom, and I'm delighted to have the opportunity to speak with you today, and thank you for your time. Fathom has a long and successful track record in the insurance sector, working with global insurance companies, including AXA and Aon. And as the broader financial sector really starts to feel the economic effects of climate change, we are working with investors, lenders, and the companies with which they're engaged to help them to understand, manage, mitigate, and report on climate risk. And I'm happy to share some insights into this with you today. Could I get the next slide, please, Andy? So in the same way that the ESG data market exploded across, particularly across the last few years, we're seeing demand for climate risk intelligence giving rise to a vast new high growth market for digital solutions and for advisory services. And so at Fathom, we are responding to growing demand for standardized, high quality flood risk data for climate risk assessments, data analytics, risk modeling, and for the creation of exciting new risk management tools from across the financial sector. And as regulators and investors are increasingly requiring companies to better manage their exposure to flood-related risks, corporate organizations, including Microsoft, are using our data to track supply chain risk in data centers, and environmental and other consulting firms are also using our data to help their corporate clients with climate risk reporting and disclosure. And much in the same way as we saw ESG solutions take off, we're working with banks, including the Bank of England, the Bank of Montreal through our partner Climate Engine, with the largest global asset manager, and with data providers, including Moody's, as they develop new climate risk products and services. And so we see our data being used for climate risk assessment at both an asset and at a portfolio level. So mapping climate risks and hazards to company assets, prioritizing assets for risk assessment, and identifying potential climate vulnerabilities, quantifying operational and financial impact, and defining the most effective adaptation and resilience measures to address risks to critical assets. And with access to high quality volume asset level data, we see data firms aggregating at a company or at a security level to provide an overall climate risk score or rating. And so our data is being leveraged for portfolio management, to identify opportunities, to invest in companies that are well positioned to manage climate risks, and to identify those who are not, for investment stewardship, for research, and for thought leadership. And I suppose if we reflect a little bit on some of the lessons that we've learned from the often conflicting ESG ratings and insights, customers are asking for data that is standardized. They want transparency. They want to see how the data has been validated, and they're looking for spatial and temporal coverage. Next slide, please, Andy. So earlier this month, we presented some new research into the UK's evolving flood risk landscape. And we showed that the forecasted increase in average annual flood losses above recent historic levels as a result of climate change can be restricted to a maximum of 4%. But Great Britain will only be able to avoid a major increase in climate change related flood risk if all countries' COP26 and net zero emission reduction pledges are met in full. So if these targets are missed, the annual cost of flooding in the UK over the next century could grow by between 13 and 23% above recent historic levels. And so we weren't surprised to see that also this month, the UK Treasury Committee wrote to 4 of the UK's largest high street banks about the impact of flood risk on house prices, identifying specific customers in flood risk areas and asking about the provision of long-term mortgages for these properties. And the committee also then wrote to the FCA to ask about the regulator's assessment of risk that people with properties in areas of high flood risk will not be able to remortgage in the future. And this isn't just a UK problem. Right now in the US, more than 14 million properties face at least a 1% annual probability of flooding, with expected annual damages to residential properties exceeding 32 billion US. And so we see flood risk having a significant impact on the valuation of assets, both residential and commercial, particularly those in flood-prone areas where assets are likely to be valued lower than similar assets that are not exposed to flood risk. And so the timing of our risk categories and risk scores product is perfect as we see the development of new value at risk platforms for and by mortgage providers, and demand for tools to assess loss grows. So from a corporate bond perspective as well, climate risk and corporate bonds are becoming increasingly intertwined as investors are looking for ways to address the risks associated with climate change, including physical risk, such as damage to infrastructure from flooding. And so in response to this growing interest, we see some credit rating agencies starting to incorporate environmental factors into their credit ratings, which of course can have an effect on the company's ability to issue bonds and the interest rate that they have to pay based on their environmental performance and exposure. And so higher financing costs, downgrades in credit rating, default risk, and reduced market demand are all leading to lower market values, driving interest from the corporate bond market for more and better climate risk data. Then from a commodities perspective, in January of this year, we saw markets bracing for the risk of a sharp rise in cotton prices based on last year's flooding in Pakistan and concerned about trade barriers in India. combined, of course, with improving global economic outlook, which led to a boost in demand for clothing. And so we see commodities being directly affected by flood risk through disruption in production, transportation, storage of commodities, supply chain disruptions, price volatility, and of course, potentially significant economic losses. And so commodities investors are seeking new intelligence to assess the resilience of supply chains to flood risk. Next slide, please, Andy. In June of last year, in June 2021, the Bank of England released its final guidance for the first ever climate biennial exploratory scenarios, CBES. The exploratory exercise looked at the impacts of the physical and transition risks of climate change. With a particular focus on climate risk, the Bank of England asked participants to assess their financial exposures for 14 perils, of which flood was included. And so to aid their analysis, the bank approached Fathom and asked us to provide high-resolution flood risk information for the entire UK under varying climate scenarios. And so our view of hazard was used alongside other data, which allowed the Bank of England to produce a comparative benchmark for its analysis of flood risk returns, which could then be drawn upon when comparing submissions from participating firms, helping the bank to identify where responses were inconsistent across firms and UK geography. So really with an ambition to highlight areas that are particularly sensitive to the impacts of climate change and future risk hotspots. And so these climate scenarios or climate dynamics provide a flexible framework where users can answer any flood-related climate risk question posed by regulators worldwide. So the SEC requires companies to disclose material risks related to their business, including those related to climate change, such as the impact of extreme weather events like flooding. And different to the growing disquiet around ESG investing in Republican-led states, quantifying physical risk from climate change is being prioritized, with scenario analysis playing a key role in reporting. Similarly, TCFD recommendations include guidance on assessing and disclosing risks related to climate change, including flood risk, by conducting scenario analysis to evaluate the potential impact of different levels of flood risk on operations, supply chain, and customers. And so we see growing demand for climate scenario dynamics from stock exchanges that have made TCFD disclosure a requirement for listed companies. And so the approach to climate risk is very well developed in the European Union, with many different regulations and directives that address flood risk and its management, including SFDR, which requires financial market participants and advisors to disclose information on how they integrate sustainability risks, including climate-related risks such as flood risk, into their investment decision-making processes. And we see the same thing happening in Japan, Australia, and New Zealand, all of whom have provided guidelines on climate change disclosures that apply to publicly listed companies. And so we see growing demand globally for climate scenario capabilities from regulators and from companies alike. And pension funds, of course, are no different. Different regulations depending on country and jurisdiction, but in general, funds are subject to regulations that require them to manage their investments with the best interests of their members, which includes managing risks related to climate change, such as flood risk. Overall, these regulations are evolving, with many jurisdictions increasingly recognizing the importance of managing climate-related risks in pension fund investments. And we're seeing increasing interest in this area, in our data, from large global pension funds who have proprietary data platforms and who have their own sophisticated climate risk tools and technologies. And I look forward to sharing some success stories around this with you in our next webinar. Andy, I will hand over to you now.
Thanks, Karena. Thanks. Okay, I'm going to quickly run through some of the existing customers and partners that we have here at Fathom. And then we've got a few minutes then for some Q&A. So if you do have any outstanding questions, do feel free to drop them in the Q&A box. I think interestingly here at Fathom, when we formed the company, really, in truth, the principal target audience for the models we were building were in insurance. And that's because insurance is really the sector and the vertical that's been using these kinds of models and data for a long time. They've been using risk models and specifically catastrophe models for 20 or 30 years now. So that was kind of a mature marketplace for us. But perhaps unsurprisingly, the market for climate risk information is much larger than just insurance. And we're now providing data, models, and insights to a real growing wide variety of organizations across banking, capital markets, engineering. We're providing data to some of the biggest engineering companies in the world. And we're also working with public organizations as well. So we license data to the World Bank, the Foreign Office here in the UK. We've just built the first statewide flood data for the state of Texas as well. So hopefully you can see here that the variety of use cases for these climate risk information is really growing all the time. And I think that's just a good thing, because really anybody concerned with climate risk could conceivably use the kinds of data sets that Fathom produces. And you can access these data via numerous partners that we have. So we work with a wide variety of partners externally to Fathom, and many of these are third-party platform providers who you can access Fathom's data via. So if you want an interface to access flood data and other information, then you can work with some of our partners to do that. So that brings us to the end of the webinar. I will say that we are at multiple events this year. You can see a list of events there. So do come and join us and meet us in person if you're at any of those events. And let's quickly answer a few questions that we have. So the first one is probably for Matt. What kind of information is required to use the API? I think that refers to input data sets. So what do you need to input to get a return?
Yeah, thanks, Andy. Good question. There's two real methods of providing input data to the API, or two inputs really. One is a point. So if you have a latitude or longitude, or a set of latitudes and longitudes, you can provide that point or those points to the API, along with the layers of data you require. So a layer would be, for example, a specific return period of flooding for a specific peril of flood. You can put in multiple different layers for multiple different points, and the API will return the data you've requested. So that's one use case. The other use case is if you're actually interested more in an area, like you're interested in a site, you can put in a polygon. You can either upload a shapefile, or you can put in a series of vertices that define the polygon. And instead of a point, then the API will return a GeoTIFF, a raster-based set of information, again for the layers you request.
Great, thanks, Matt. A question, I think for Karena. Is it possible to get sample data for specific regions?
Yes, absolutely. So if you specify the region, so you can ask for a specific country, or you can provide us with a shapefile, we can provide that sample data to you. Usually our turnaround is a couple of days.
Great, thanks, Karena. Last question. You've spoken about validating models under the current climate, but how do you validate future flood models? That's a really good question. And the answer is that we can't, unless you have a time machine. There's no way to validate these models that we're building under future climate conditions. I will say that the way in which Fathom attempts to endear faith in what we're doing here, in the absence of being able to truly validate future models, is the peer review process, is by opening up the methods and being very transparent around how we do this. And I think transparency here is key in developing some faith in these kinds of data sets and models. Frankly, in the absence of being able to validate the data that we're producing in this market, then you could very quickly become a skeptic, right? There's no way to test these models, but the way in which Fathom is trying to endear faith and have some validation of our work is via the peer review route. So we are trying to be very, very transparent with how we build these data sets. And you can ask us any questions that you want in terms of how we build these models. And indeed, all of our clients get access to a very extensive methodology document as well. That brings us to the end. So let me say thank you to my colleagues, Matt and Karena, and thanks to everybody tuning in today. Do feel free to get in touch with any additional questions, and hopefully we'll see you soon. Bye.